That's what I think is going to happen. The public is going to wake up to the gold and silver bull market, and it's still early days. They're still focusing on tech and crypto. And when they wake up, though, to gold and silver, it's going to be too expensive, especially with gold. So they're going to go for the miners, and that's why I think the miners are going to start outperforming. Silver is looking very good, and I think silver will also outperform bullion, and by bullion I mean gold. And why? Well, the same reason that it's easier to buy miners. It will be easier for the general public to buy silver because it's still below $50 and still relatively affordable, and that's why I think silver is gonna outperform gold.
Mario Inneco, a former City of London banker known online as Manneco64, believes the broader public has not yet awakened to the ongoing gold and silver bull market. While most investors remain focused on tech and crypto, Inneco suggests that when public attention does shift, gold may become too expensive, prompting many to turn to mining stocks as a more accessible alternative. Current data shows roughly 1 in 7 U.S. adults, 14%, own cryptocurrency today, with few others intending to buy soon. Most Americans say they won't ever buy it, viewing it as too risky. However, ownership among U.S. investors has clearly risen from single digits in 2021 to 17% today. Gold prices have surged in 2025, with President Trump's focus on tariffs pushing the metal to fresh highs. The longer-term outlook remains bullish, with prices expected to average $3,675 per ounce by Q4 2025 and climb toward $4,000 by mid-2026. Meanwhile, silver presents a particularly compelling opportunity in the current precious metals landscape. Inneco highlights its strong momentum and relative affordability compared to gold, factors that could drive silver's outperformance as investors seek lower-cost exposure. The metal offers a practical entry point for those priced out of gold, while still aligning with the broader bullish thesis. This view is reinforced by major institutions like Bank of America, which recently raised its forecasts to $40 silver and $4,000 gold by late 2025 or early 2026. While gold remains the headline asset, analysts are increasingly emphasizing silver's dual appeal, both as a monetary asset and a critical component in industrial supply chains. Before we dive in, don't forget to like, share, and subscribe. Hit the subscribe button and turn on the notification bell so you never miss our latest insights and market updates.
I think the miners are doing really well. Let's say here, GDX was up about 50% year to date, and GDXJ the same, up about 53% year to date. The miners have underperformed bullion, and I want to show you a chart here, and this is using the Philadelphia Gold and Silver Index, which is of course not the GDX or GDXJ. It's just an index of gold and silver miners, and the reason I'm using this is because it goes back until the mid-80s, and this is basically the Philadelphia Gold and Silver Index divided by the gold price, and you can see how it's been underperforming gold ever since 2022. But now we're breaking out of a falling wedge, which is really bullish. And I think what's happening as well is that with the gold price going higher and higher nominally, it's getting harder and harder to buy the ounce of gold. So I think investors are going to choose for the option of buying miners. What do I think about that? Well, I have miners. I have added on to my miners recently, but I also try as hard as possible to buy physical gold, and you don't really have to always buy an ounce of gold. You can buy a quarter of an ounce, you can buy a tenth of an ounce. Some people call that fractional. I don't like that term. There's no such thing as fractional gold, only if you look at it in terms of 1 ounce. The other thing I would say for my UK viewers, yes, the 1 ounce Britannia is around 2,500 pounds. It's probably going to go a lot higher, of course. So think about sovereigns, which are just under a quarter of an ounce, and they're half sovereigns as well. And maybe even in North America, you could look at sovereigns. Why not? It's gold. If you're not bothered about seeing the face of the Queen or King Charles on it, it's gold. So that's what I think is going to happen. The public is going to wake up to the gold and silver bull market, and it's still early days. They're still focusing on tech and crypto. And when they wake up, though, to gold and silver, it's going to be too expensive, especially with gold. So they're going to go for the miners, and that's why I think the miners are going to start outperforming. Yes, there is counterparty risk when you buy the miners, not just in terms of owning a company with like management and directors, but also political risk depending on where the properties of these mining companies are, and also the counterparty risk of having your shares with a broker. So you have to think about those things and decide how much risk you're willing to take, and try not to be too greedy. Try not to put everything in the miners and neglect having some physical gold and silver. So I think it's about to get very interesting. And the other day yesterday I spoke about the Japanese government bond market. Well, Weston Nakamura got back to me, and I think we're going to be covering that on Wednesday, tomorrow. So we'll cover the bond markets tomorrow. What else is going on? Well, silver. Silver is looking very good, and I think silver will also outperform bullion, and by bullion I mean gold. And why? Well, the same reason that it's easier to buy miners. It will be easier for the general public to buy silver because it's still below $50 and still relatively affordable. And that's why I think silver is going to outperform gold. Does that mean I'm going to get rid of my gold? No, I'm going to hold on to my gold for dear life, as I've said in the past.
Silver is gaining momentum and, being more affordable than gold, is well positioned to outperform as investors seek lower-cost entry into precious metals. Innecco notes that silver is quickly approaching the $40 mark, and he believes it's becoming increasingly difficult for the bullion banks to suppress the price. I think they're running for the hills, he says, suggesting that resistance to higher silver prices is breaking down. Silver prices hovered around $38.90 per ounce on Tuesday, holding near 14-year highs as a weaker dollar and lower treasury yields continued to support demand for precious metals. Beyond the technical aspects of precious metals markets, Inneco sees the precious metals bull market as a response to deeper structural failures in Western economies. He argues that governments, particularly in the UK, are incapable of reversing decades of fiscal mismanagement and that only systemic collapse can bring real reform. Central to his view is the unchecked rise in government spending, once 8% of GDP in the US and 10 to 12% in the UK, which he sees as the root of today's instability. This long-term excess now shows in the US, where federal debt exceeds $30 trillion, surpassing GDP, and 2021 spending hit 40% of GDP, a post-World War II record. Had spending been kept near historical norms, the budget would have shown a surplus. Let's get back to the video.
Silver is fast approaching $40, and I think it's going to be really hard for the bullion banks to keep the price down. I think they're running for the hills. So before we go further into the miners and silver, just want to talk about what's going on here in the UK a little bit with the economy, with what the government is trying to do in terms of taxation and spending. Well, unfortunately, the current government is got no clue as to what needs to be done to help the economy. I think the only way things will improve is for the current system to implode and collapse. And that's not just here in the UK, it's also in Europe, in the US. Unfortunately, we've had over 100 years of increase in government spending as a percentage of GDP. Just look at these two charts here for a second, one from the US and one from the UK from the beginning of the century. And you'll see in the US chart that government spending to GDP prior to the creation of the Federal Reserve was around 8% of GDP. And the same thing goes roughly for the UK prior to World War I, used to be around 10-12%. So that's really the whole problem. And the welfare state is part of that because the government has to tax the public to pay for that. It doesn't come out of the sky, the welfare state and all the money. But we know that governments are monopolies, and monopolies always abuse power, and they've abused power, of course, through the state pension. Most people think that when they pay into the state pension through their national insurance here in the UK, that it goes into their account, but it's nothing like that. It goes to pay the current retirees or pensioners. So it's a little bit like a Ponzi scheme. That's what Charles Ponzi did back in the day. I think it was in the 1920s. He used to take money from a group of people, and he used to pay the previous investors like double, and word got out, wow, this guy is running this scheme with stamps. That's how he did it, for stamps, trying to arb the foreign exchange difference, which was minuscule, but people bought into it. And it's the same thing for the state pension, unfortunately. The other thing with the state pension is that when it started, I think around 1909 in the UK, hardly anyone survived on average past 65. So it was easy to finance. It was actually a cash cow probably for the government. I haven't looked like in detail about that, but I would say it was a good scheme. But now with the average age or life expectancy being around 80 or just above 80, and a lot less people working for the amount of people retiring. I think now it's getting to the point where there's 3 to 2 workers for every retiree. Back in the 50s, there were 7. So you get what's coming now. There's very little money for the pensioners. So this just came out now yesterday, and it's in the Telegraph. It says millions to be forced to work for longer under a state pension reform. Labor opens door to later retirement age after launching review 3 years ahead of deadline. So what's going on here? Well, I thought it was pretty outrageous the way they look at this. They're saying that people are not saving enough. Well, yeah, I was so outraged that I posted on X and I put a screenshot of this article, and I said, the people who steal your income via taxation, regulation, and the inflation or inflation of the currency are blaming you for not saving enough money for your old age. They've got more front than Sainsbury's. That's a saying in the UK. It means, you know, they don't have any shame. They'll say whatever they want.
As confidence in traditional financial systems weakens, gold maintains its role as a trusted store of value, offering stability amid uncertainty. Silver, with its strong momentum and greater accessibility, is emerging as a favored choice for those seeking exposure to tangible assets. Together, both metals are gaining renewed relevance as investors look for reliable anchors in a shifting economic landscape. Is silver set to outperform gold in the months ahead? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. Only 4.5% have subscribed, so hit the bell icon and turn on notifications to stay updated. Your support helps us continue delivering the latest market insights to you and the entire community. Thank you for tuning in.